Good morning and welcome back to the Tomato Timer. Our show has had a bit of a hiatus as we went off for summer break, but I'm excited to bring back episode 52, where we're going to dive into financial literacy and education with two awesome guests. We have Dr. Muna, who holds a Ph.D. in Islamic Finance from Durham, as well as an MA in Investment Finance from Hull. And she has over 20 years of experience in the field of finance and regulatory compliance from the private sector to semi-government. Shara holds a bachelor's in law and a master's in Islamic finance practice with more than 10 years of experience in the legal and financial fields. And she received national recognition for outstanding contributions of female to develop the Islamic finance industry in the Maldives. It's really, really good to have you. Thank you so much for joining us.
Thank you for having us.
Shara, I'd like to start with you because you both came together when you launched Five&Co. So I'd like to understand a little bit more about what it does and what led you to come up with it.
Okay, so early in my career, I was in charge with debt recovery departments of some of the major banks in Maldives. So I got to meet all different types of people at different stages of their lives, and some of them were in their early 20s, others in late 60s and 70s. So I got to see firsthand how bad financial decision making actually affects their lives. But it's not just their lives that's affected, even they can break down their whole family with it. So I was always very interested in teaching myself and my son how not to make bad financial decisions. So this is where this is all started. So when I came to know that the school that my son was attending, they started a financial literacy program. So I went and I met with the principal. He's actually a very visionary person. He's very into the 21st century skills. So we clicked immediately. We started talking about what should be covered and what they are already doing in their financial literacy program. And I came to know that there were a lot of aspects that is needed, but it's not there. So after a couple of meetings, I just proposed an entirely new thing that sort of covered everything in relation to personal wealth management, starting from wealth creation to wealth distribution. And we also was very, we talked a lot about what the Gen Z is facing and what they will be facing in their career development and all those things. So we thought it should include growth mindset, sustainable development goals, and all those areas. So it was also around the time that I joined Gateway. And it's where I met Muna. So I mentioned about this project with her, and she was really interested in it too. And she sort of did her magic and turned the whole thing into an externally endorsed program, and that's the birth of Five&Co. She brings in a very different perspective from where I am coming from, but it's very relevant to young adults. So Muna, I should explain why.
Yeah. My side is different, and it's the side where not everybody thinks that they might need it. It's more personal, and it's mainly two things. The first was one experiences when my son and his cousins they were at an age where they had to make their decision and decide what they wanted to do. And when we asked the question, "What do you want to do?" is like the answer. One of the answers was, "What makes money?" So it was a question answer, sort of question answered by another question. And to answer the first, how can I make a decision when I know very little or have very little experience? And the other thing is for them to answer the second, what do you need the money for? So you're talking here about freedom in decision making and being financially free, and financial and decision making where your parents might have an influence, and sometimes it's others that can make the decision for you, just regarding your kid, taking into consideration your capabilities or your interest, because you're at a stage where you can't make this decision. And then have they thought, when they say what makes money, what are they actually seeking? I mean, what are they seeking short-term, medium-term, long-term? And that took me back to a very scary time of my life, a time when I had to make such a decision. I could feel that time. And then think, how can we avoid such difficult confrontations? The second is, although I live in a region where economically we are better than many of the other countries around us, personal debt is very high. And it's not student loan. It's
Okay.
more of a lifestyle living beyond your means.
Yeah.
And that is dependent on others. So this is unfortunate that nearly everything is put towards consuming and very little towards being productive and innovative. So I thought something needs to be done to help reduce such confrontation at that stage of your life,
Yes.
and be able to make a decision that will have positive impact on your financial well-being going forward, but at the same time, not only benefiting yourself, but benefiting others also around you. And then another thing is, while I was working in the financial sector, and mostly I worked in the regulation and governance and compliance, from experience, you can put regulations, set them in place, and try to implement them. But then how effective this implementation depends on the attitude and approach of those involved, foster the decision makers of those institutions. And you're talking about attitude, their mindset, and that doesn't happen overnight. So with the personal family experience, I felt that we need to look at the solution from a long-term perspective.
Of course.
And our financial behavior and required mindset and attitude starts at an age earlier than we think. Because everybody thinks, we can learn it later on in life. But once you get to even to your teens, you've already established and set precedents of how you think, how you behave, your characters, your personality has already been developed. And that can have effect on your decision making. So while thinking of what ways and how, I came across Sharahath, who had similar interest, and we both were consultants at Gateway Global, and that's where we met, and things took off from there. And once the program was introduced, we then established Five&Co.
Amazing. Well, I can definitely attest to the fact that our financial kind of decision making and patterns tend to come up very, very early. I think I can tell you that the way I behave with money and deal with stuff is how I saw my parents dealing with it. And unfortunately, if things aren't done in your family, or if there are bad habits coming through, that can really make a big impact on your life. And second part is, at school we have carefully tiptoed around the problem of how money works. We talk about economics, we talk about all these abstract concepts, but never come back down to the fact that, hey, I'm going to go into this world, make money, earn, spend, take loans, do whatever I need to do. But how does that exactly work? How am I going to do this in the most, the most considerate and most effective way? So I can definitely see these challenges. I've felt them myself, and I've in some ways I've had to figure it out in the last few years as I went through school, through university, and now kind of independently trying to sustain myself. So I want to kind of dive into that a little bit more. So you mentioned some of the challenges, and where within the education system, where do you see that the biggest kind of holes left that we need to address? So I appreciate that your program is kind of adding on to the school curriculum. Is this something that should be developed within the curricular national curriculum systems, or how do you see the future looking like in our education system to address these problems? I'll direct it to Dr. Muna and Sharahath. If you'd like to contribute, that's fine as well.
The thing is, it's not. The issue right now is that it's not considered as an important 21st century skill. Well, recently you've seen some sort of people talk about it, and there's an interest, but it hasn't developed an interest where you could see to the extent that it can be part of the curriculum or part of your school day. It's mainly it's like it's a side project, side activity, side program. We would like it to be embedded into the curriculum or within your school day, because it's a skill that you need today in today's different way in life, because you're talking about a totally different environment than when the actual curriculum that we are familiar now was set.
Absolutely.
Now we're in an environment where it's more high tech, AI. You're talking about artificial intelligence and so forth, and knowledge is easily obtainable from the web these days. So yet behavior and attitudes are embedded skills that you need to also work on, and to be able to cater for your decision making that would have a positive effect on your financial life and your well-being. That's one issue, to sort of get them to see its importance. The other is they don't see it's relevant to start at a young age. This question is that what can they learn at that age? And no, they can actually learn more if they to start at an early age, because decisions you make will affect your sort of your life and your well-being later on in life. The way you make these decisions are based on your attitudes and behavior that you've developed, acquired towards how you make your decisions.
Absolutely.
And so it's just like how we try to teach kids problem-solving skills at an early age. We can do that, work on their attitudes and behavior also from an early age. Like, do I buy it now or later? Do I need it? Can I wait to buy it later? Why do I need it?
Yeah.
Are there any suitable substitutes? What else is available? A way of thinking that will have an impact on the financial behavior, so that will affect us as we get older. And later on, and you can also introduce terms like savings and spending. And as they get older, you then introduce the more technical terms that they would be able to handle. So it's not necessarily because you develop. You see, awareness is a first step, but it doesn't get you there. It only starts. It's not about how much money I make or how I will make that money. It's about the ability to control, maintain, and grow that money. Because I can have the money, but then I can spend it in a second, and it's all gone. If I can't hold myself from buying buying now and wait to buy it later, or save for a later plan, or plan for it. So that's the main issue, is to be able to sustain it. And a lot of what you see now, even the research and the studies they do, they have noticed that the knowledge of financial literacy awareness is increasing, but implementation and positive effect is not as increasing in the same proportion.
Yeah. I actually, this is a little bit of a tangent, but from one of the kind of the frameworks that are being set up by the United Nations and the World Economic Forum regarding what are the key curricular skills that need to be developed for the 21st century, which include things like problem solving and creative thinking, but also entrepreneurial thinking. I've noted that there is not as much weight given to financial literacy. And just speaking as an entrepreneur, one thing that I'm sure a very common kind of concept is that most startups go bust because of their cash flow. And the reason is because many of us from a young age, especially for young entrepreneurs, we don't know how to deal with money, how to budget, how to kind of make sure that things are going in the right direction. And oftentimes it's not really about whether you will get money or not get money, but actually how you control the expenditure, right? Cash flow is all about managing when and what will be spent at what period of time. So I can also share that from, if we want to head towards a part of our or an economy where we are kind of encouraging entrepreneurial mindset and increasing the number of startups being developed, but also we're looking at the growth of the gig and freelancer economy. And especially these kind of these economies will require a much higher degree of financial literacy for the people involved, because you are no longer under a safety net. You don't have a pension. You don't have a company or an organization providing you allowance for certain expenditures, and you don't have that kind of safety. And so it's so much more critical for you to have all the knowledge and be even more vigilant about your spending. Sorry, I would like to direct that question back to Shara as well. And then we can also get into a little bit more of a specific problem that young people face. But any other kind of feedback on that, Shara, on terms of the education system and any changes you wish to see?
The thing with the education system is that the world is changing at a very fast pace. So you cannot expect education system or those involved in the education sector to keep up with it. So if you want to be relevant to the changes that's happening in the world right now, then you have to take advantage of the education system. Plus, you also have to develop yourself, work on it on yourself to be relevant. So you can't keep on saying, okay, these are the things that's missing in the education system. For example, with me and Muna, we know that the education system isn't, financial literacy isn't really, it is being recognized now, but there are difficulties in bringing it to school system, for example,
Yeah.
where you get the resources to implement, and there's a limit to how someone can pay for it, and how to fit it into the curriculum and all those things. These are real issues to the schools, even if they want to do this, even if they believe that this is a part of the skill set that students should have. So that's also an aspect that I want to bring in. There will be issues, but it doesn't mean that there aren't ways that we can work around it. There are things that we all can do. That's what you are doing too, right? Yeah, you are filling in. You saw a gap, and you are filling in that gap. You're not just there complaining about it, right?
Agonizing over it. Yeah, absolutely. Um, which brings me to like a more of an kind of a rubric type question, because, and this is kind of again from my own journey. Many of us and many kind of listeners on the ZNotes podcast are end up going internationally to study abroad for their undergraduate degree, and it is for the first time that they actually leave home and are required to set up their own independent bank accounts and manage their expenses and cash flow. Some of the local students might take kind of student loans to kind of fund their lifestyle, while others might be funded by their parents or other funding bodies. But in every case, we have a set amount of money in a bank account, some of which is proportioned towards our tuition fees, most of it, to be honest. So most of it is, and then another big portion is towards rent. And then finally, we have that little bit of spending, which is available for our living costs, but also any kind of activities we'd like to be involved with during our university time. And it is I can share that it's quite a critical and a very weird time for many of us, because we've never had that independence before, and finally we're getting this kind of financial freedom to some extent. But it's quite scary to do the right thing. And so we have two schools of thoughts, right? We have those who are extremely pedantic and rigorously budget what they would like to do and how they would like to spend in a day, week, month period. And there are some who just tap on a contactless payment thing and then never think about what's left in there. So what is the kind of balanced approach, and what's the appropriate way to be dealing with limited finances at such a young age, and one where you're actually not earning any money, but actually just investing in yourself, because your education is essentially an investment in yourself?
Okay. There's a lot of psychology involved in any kind of decision making. But when it comes to finance, there are two major issues. The first one is that all your money beliefs, your social norms, and all those things that goes into financial decision making, it's developed in your formative years. But you don't get to actually make financial decisions until you are an adult. So there's a delay in that part. And the second issue is that all the financial decisions that you make, whether it's a good decision or a bad decision, you don't see the impact until later in life. For example, the impact of saving, you don't see the benefits of it until you hit retirement.
Okay.
Someone can have a really bad impulse buying habits, and you don't see the impact of it until you are very deep in debt. So what you have to understand is that by the time you are making financial decisions, when you get to make financial decisions, you've already developed your money scripts or money personalities. So you can be a money avoider, or you can be someone who hoards. You can be someone who's very vigilant about money, or someone who is a status seeker. That's what you are seeing in people around you. You're saying that there are people who are very strict in managing a budget. The other people, they just don't know where the money goes. So that's because of the money script that's already been developed. Now, the ideal way to manage a budget, or to be there are many approaches, but the best way is to reach a 50-30-20 rule. So it's where 50% of all your income goes to your essentials, like food, rent, and all those things. 30% is discretionary, and 20% is saving. So this is the ideal situations. But when you start, you may not be there. But that's the one that you want to do. So you can make a budget, a really good budget, but it doesn't mean that you have the ability to stick to it.
Sure.
Your money personality is what's going to allow you to stick to it. So it's very important to find out uh, what kind of money personality dominates in you. There are assessments and quizzes that's available online that you can take and to see where you fit in. And the other thing about being in college and managing money is that your money scripts or personality may be very, very different from your roommate or the people that you choose to hang out with.
Yeah.
So, and they have a huge impact on how your money script evolves. So that means they also have a huge impact on how you achieve your goals and how much time and energy you have left to do your studying as well. So it's not really being able to make a budget. You can go very detailed into it. It's actually very advisable that you go very detailed when you're trying to draft the budget in the first place. But you have to understand that sticking to it is difficult, and you have to know yourself first to be able to do that. Otherwise, you'll just lose the whole. You lose faith in the whole process of budgeting and managing personal finance and all that. So that's my advice: 50, 30, 20 rule. But know yourself and
Yeah.
work on it too.
Yeah. I mean, that's very, very insightful. I mean, as you spoke, I'm like, wow, these are things which make so much sense, especially when you talk about how our formative years inform our decision or money patterns, and then we only see the results in a very delayed fashion. And if you think about um, the reducing attention span of Gen Z, it doesn't make sense. We want to have immediate reward. That's and any form of delayed reward is actually difficult to accept. And maybe it was possible, maybe it still is, but I mean, it's getting harder and harder for younger people to appreciate what the benefits of investment, because they're not tangible, they're not immediate. And the other point about our external factors, and you're absolutely right. There are so many, the groups and friends you start to make are so critical to how you develop. And it might be worth pointing out that we might be spending time with our roommates or our flatmates, and we do everything together. We go do groceries together. We hang out and enjoy ourselves and go out to do other certain activities. But our financial situation may be very, very different, and because of this almost like personal veil which exists when we talk about money. Some people may be really well off, or they might have additional funds to rely on or safety nets to leverage. Others might not, and it's difficult to and it always has been historically too. But it's difficult to talk about money. You won't be really able to say to your friend that, hey, actually, you know what, I can't spend this much because this is happening. And so we might be forced, through peer pressure, to be spending more or less. So I'm just kind of like no other comments, but just to kind of highlight these points. You're absolutely correct, and these are things that young people face on a very regular basis as they head towards this kind of a more freedom in how they spend and save money. Dr. Muna, would you like to add anything to that?
Just something. It's not easy to save at that stage of your life, and you might not even think about it, but it's very, very, very important that even if it's just £1, once you've decided that I'm going to save, then I'm going to save, and I'm going to start saving. And you don't have to go. Your aim could be 20% of what your income is, but you can start 1%, 5%, and then gradually. But the idea is that I will save and I will not think about it. That does not exist. So when that does not exist, you will then try to live with what does exist.
Yeah.
So you have to. That's the basics I would give, because even if you, like you say, you have peer pressure and so forth, in the end, you're going to be the one. You have to talk to yourself and I'm the one who's going to be suffering long term.
Yeah.
They might be around, they might not be around. So it's just I have to confront right now and maybe be in an awkward situation, but later on, this would come to my benefit. And it's I think what helps is if you, once it's put aside, don't even think about it. It's very rare that I will go back to it. So if it doesn't exist, you will not, it will not occur to you to go on to sort of dig into that pot. And then a pound and a pound and a pound each month. And even if you don't, your income is very little, but the habit of having to save something you're building it at that stage, so that when you
Absolutely.
do start generating greater income, you don't go on a spending thrift. You got to the habit that a part of it has to be put one side.
Okay. Yeah.
To me, that's the simplest I can give. I mean, when you come to budgeting, that is a must in a sense.
Yeah. When it comes to saving, though, what are you? And I know there's a lot of kind of conversations going on in global trends around things like cryptocurrency, talking about NFTs and investment and that sort of things. People are really jumping on the bandwagon without actually knowing a lot of the kind of the details behind it. So there is obviously the point on saving, but when you share this kind of advice of saving, do you also advise us to be thinking about investment at such an age, or when is it appropriate to be thinking about these things? And what options are there in terms of investment at that type of age?
When you're talking about investment, let's try to answer the three questions. Why would you need to invest? How do you invest, and what is it that you need to invest on? So the first question, why you need to invest, that's the easy question, because if you don't invest, whatever that you have saved, it'll lose in value because of inflation. So it's the short answer is you need to invest. But when it comes to how do you invest, the first thing is get to a point where you are capable of doing a little bit of investment. And by that I mean know what investment is first, because it's one of the sources of investment. Sources of income. There are so many other sources of income, like the salary and wages that you get from your employment,
Yeah.
what that you get from your business, and rental income, and all those things. These are sources of income, and investment is just one of it. So to get to a point where you can make investments, that's the first point. And it means that you have to be able to, from whatever that you earn, you have to be able to pay for all your expenses. Number two, you have to have an emergency fund, which means if you're single, it means that you would have to have about 3 to 6 months as an emergency fund. But if you have dependents, it should be more than that. And the third thing is you need to have your debt under control. Like those that has a high interest, like credit cards and personal loans and all those things, you need to clear them out. And the debt payments for like mortgages or car payments, these are okay because there's an asset tied to it, and the interest rate is a bit low, so they're okay. So it's what you can invest is everything after what is left over after attending to all those things.
Yeah.
Now, if you are, whatever that's left off, you still need to think about where you want to invest. If you are going to make any big life decisions within the next 2 to 5 years, like buying a house or starting a family, then you need to save up that amount and invest it in a more liquid form. So it may be fixed deposits or money market or something that's easily available that you can cash out. What's left after that, you need to invest in. You can invest in long-term funds, other long-term like stocks or bonds or mutual funds or other things. When it comes to cryptocurrency and other things, what you need to understand is that these are they are volatile, they are high risk. So you have to be able to take the risk associated with those investments if you are considering those. So that's the first part of how you should invest. The second part of how is that, are you going to do it yourself, or are you going to hire a professional to do it for you? So in either case, you have to educate yourself with the basic investment terminology and how to do it and everything. If you're going to do it by yourself, you need to learn about the investment, the ways to do investments, and one of the most important things is know about yourself as well. So if you are someone like who reacts really badly to movements in stock market, then maybe you shouldn't do it by yourself. Maybe you should hire some professional to do it.
Yeah.
But even if you are approaching a professional, you should be able to answer the questions they ask. And one of the questions they ask is what kind of risk that you can take, and what is your risk appetite and all those things. And you need to be educated enough to answer those questions.
Mm-hmm.
You also need to be educated enough to ask questions to them, like about the fees and costs, and what they're doing with your money and all those things. So if you are into investment, there's no escape. You need to be educated. You need to learn about these things. Now, what do you want to invest in? There are so many types of investments out there, but to give a very short answer, it should be something that gives you the maximum diversification. You can't
Mm-hmm.
invest in one company or one industry. That's not safe. You should also invest in things that will give you the maximum tax benefits, and you should educate yourself, and whatever that you invest in should be something that's compatible with your values. These days, we don't want to invest in things that are or assets that are only about generating profit. We want to invest in things that are sustainable. Uh,
Mm-hmm.
those that are trying to make good impact to the world. So these are the things that you need to consider if you want to get into the domain of investing. There's no other way. You need to educate yourself.
Amazing. My mathematician brain is really happy because that was a very algorithmic answer in how you approach each step along the way. Dr. Muna, anything to add on that?
Just to she touched on it already, but with regards to the risk you're going to take, you have to, when you educate yourself to what risks are involved, you can buy stocks, but then whether there's a risk in I'm going to buy it for its appreciating value, I'll buy low, sell high, or I'm going to buy it to keep and then I'll have a regular income coming in from the dividends.
Yeah.
And that's disregarding which stock you choose. The other thing is that what assets generate your income. And then you could invest in a car or invest in a house. That isn't an asset, but it's not going to be generating income if you're going to be living in it. It's going to be causing you. They're going to be expenses, not income coming in.
Yeah.
So you can't. It'll be something I save towards, and I will buy that house, but it will not. Then it will not be part of my portfolio that will generate me income. My investment portfolio that will be generating me income, because I'm going to be living in it rather than renting it.
Yeah.
So that needs to be put into perspective, because you might say, okay, I'm investing in a house. You're investing in a house to live in is different than you're investing in a house that you're going to be renting.
Yeah.
It's not going to be income generating income. So this when you educate yourself in these little things, it's not as much as technical, but these general awareness then helps you to make better decisions, and then looking at your cash flow better.
Of course.
Because like you say, cash flow is key.
Yeah. In a personal capacity as well as a startup or business capacity. Yeah. I want to bring us to the final question that I have, and I appreciate it's a little bit abstract, but at the same time, both of you have had such diverse experiences across your illustrious careers that I'd love to kind of just get a little bit of insights into young people who are thinking about the finance field in general as something that they would like to pursue a career in. What are the kind of what are the areas that you experience, and what are these key areas that they can get involved with? And also, kind of the second question is, what piece of advice do you have when entering this job market? Dr. Muna, I'll start with you.
There's two sides of it. You can work on the technical side of it, where you're dealing directly with the finance, and you go into investments, investment finance, management, trading, brokerage, financial planning, corporate finance, working with banks, capital market, and financial institutes. So that's it. Then you are more technical. Or you could go on the other side, which is less technical in a sense, but you're aware of the technical matters and so forth, and that's the path I took, where you work with the governance side and the regulators and regulatory authorities, and that's where they set the playing field for the financial sector.
Yeah.
And within that, you have the banking regulators and the capital market security regulators. They look at things from two different perspectives. The banks regulators, they look at it from the perspective of the financial stability of the bank, whereas the capital market security, they look at it from the perspective of an investor protection. So depending on your interest and your personality, which route you want to take. I found that, the financial market sector interested me. It was more dynamic and things, but the technical aspect, I didn't feel like it was me to deal with it on a daily basis.
I see.
So you then shift towards, and you go to, and you try, I started there, but then I moved. I found that I enjoyed more with regards to setting standards and, working, enhancing the professionalism in the industry itself. So, and governance and compliance. So it depends you on your personality, what you like. So, you could enter, but you would need to have the technical knowledge, because when you do if you go even into regulations or so forth, you need to understand it.
Yeah.
And it will help if you have worked in the field itself, because then you can see when you come to set regulations and so forth, what impact that will have and how they will be able to handle it. So it's like getting an idea. You have to get an idea, but then you decide where you want to continue. Depends on your personality and what interests you.
Amazing. Sure. I'd like to kind of pose the same question to you and actually build it up a little bit further to say, what sort of degrees feed into these type of fields in terms of university degrees?
There's a lot. It can be accounting and finance. It can be behavioral economics and finance, investment and analysis, and there are so many things that you can do. Whatever it is that you that interests you. But I would say all these degrees, except behavioral economics and finance, they are more towards. I don't want to say it's more towards capitalism and all those things, but it is around profit maximization.
Yes.
So,
yeah.
But what we are seeing right now with millennials and Gen Zs and it's the alphas, right? The youngest. So they are more into values and sustainable development and all those things. So maybe these degrees and the finance education, they may not give you at this current moment, they may not give you um, the background for financial decision making that is compatible with these areas. So even if you go into these fields, do educate yourself in what you want to do to bring some sort of change, some sort of impact, because that's what we all are trying to do now. We don't want profit maximization. It shouldn't be the only goal. There should be making a positive impact with whatever that you are trying to do. So that's one thing that I want to add. It's moving towards that, especially Islamic finance. It's moving towards that, but it's not at a place where you can easily say, okay, this is the way to go. This is how you do it. So that's it. Yeah.
That's very helpful. Yeah. I think this has been an incredible episode. I think I've had a masterclass in financial literacy, investment, spending, and everything finance related. I really appreciated both of your times. Thank you so much for joining us. And to the listeners,
Thank you.
thank you so much. And to the listeners, thank you for joining, and make sure to keep posted on our different social media accounts to know when our next episode will be going live. So thank you very much. Take care. Bye.
Bye.
Thank you.